Hello there, my friends. Chris Marcus here with you on Tuesday, August 2nd. That's right, amazingly, it's August, even if it feels like it's still the beginning of another financial year. Yet here we are almost through the summer. And today, we have a video about an interesting scenario that could well play out, something that we talked about a little bit yesterday, reviewing Michael Pento's interview. But what could actually happen if you have a stock market correction or crash, if you will? And at the same time, imagine if the manipulation in the gold and silver markets was ended for one reason or another. What would happen to the miners? So, if the stocks in general are going down, there's a degree of correlation that the mining stocks are stocks. Um, Yet, if at the same time you finally see the higher metals prices that I believe are coming, many others have talked about are coming, like Eric Sprott and Ted Butler and Andrew Maguire and a bunch of these folks that I personally agree with, it's interesting to think about what could happen with the mining stocks. Keep in mind back in 2007 and 2008 when everything really started to get a bit chaotic. I believe gold, silver, and the miners all got pummeled initially before eventually doing pretty well going into 2009, 2010, and of course the exciting, epic summer and year that 2011 was. I can still remember it today, and certainly when I think for a lot of people who saw the response to the last crisis and saw that it wasn't just more money printing, but really ramping the hose up and printing and borrowing at a pace that we've not yet seen, was certainly a fascinating time for me, and I think for a lot of other people, where I believe made what was an intelligent response in going into precious metals or any sort of asset that would perform well during a period of insane money printing. Yet we found out it's a little bit of a rigged, a lot of a rigged game. Again, not just that the precious metals are by any means the only ones that are rigged. In I'd say based on being in Wall Street for 11 years and being an economist and writer and commentator, whatever you call what it is that I sit here and go on about each day. Since then, I would say that it's probably harder to find a market that isn't rigged than one that is at this point, which again I think is unfortunate as someone that actually I really enjoyed the thinking behind trading, the strategy, understanding what's going on, and it was always sad to me that I don't know, it just felt there was so much dishonest about what we've been presented with that anyway, that was part of why I left and shared at least my thoughts. Not to say I have everything right, but anyway, we'll share what I found helpful and like to think I've gotten a few things right. Or perhaps more importantly, I like to think that in time it will be interesting. Maybe one of the reasons I started this channel was almost more of a journal, in the sense that I do believe a lot of these things that we talk about here each day will turn out to be accurate at some point in time. Whether that's tomorrow or next year or 5 years from now, we'll find out. That's the part that's always been a bit tricky for most people who are trying to well, I suppose that I'm not trying to time the collapse. Maybe I am trying to time the collapse of the bubble. Not the easiest thing to do, although understanding certain things that over time would seemingly have to play out. I think that's what can be a bit more clear. And if you can by all means, if you know how to trade Bitcoin or gold or silver on a day to day or hour to hour basis, or if you're market making, certainly if you know how to do that, by all means, go for it. Um, despite being formerly an option trader, which is by nature a bit more short term, understanding the bigger picture and getting into Austrian economics, really understanding why these bubbles happen and all that was A, always really fascinating to me, and B, it might take a little longer, although you certainly can really skew the odds in a high percentage in your favor. So I always figured, if you can understand what's going on, make a trade every year or two, as opposed to having to be glued to a screen every 5 seconds, that always appealed to me. And like we mentioned in that comment on Jim Rogers' interview, invest in what you know and what you're good at and where your edge is. And, you don't have to, if you don't like stocks, you don't have to invest in stocks. You don't like gold or silver, there's other stuff. But anyway, this whole situation has been fascinating to me, and thinking about what might happen with the miners. Let's say that Michael Pento's right and central banks really slow down the printing in this fall. Let's say the Fed starts to unwind its balance sheet. I'm still a little skeptical that will actually take place. But let's say that did happen, and you really saw the stock market get hammered. Well, I think the miners would get hammered on certain days that's happening too. Although if that's going on and at the same time one of the responses are people are getting worried moving into gold and silver, and there's a lot of physical demand adding to what I believe is already happening beneath the surface. I do believe there are central banks and large buyers, and like the Chinese and everything. You hear about the data from India, and really the bigger entities. Certainly in terms of retail demand, everything I hear from shops that are selling coin or bullion just to regular people, certainly I hear that's more customers are selling than buying. Although, again, the part that I don't think most of us in the public really get clear access to is what the central banks are doing, and some of the things that I don't feel we get honest reporting on, which again is why I like listening to Andrew Maguire. By the way, we'll have another video on him this week, because I was actually invited to a webinar where he talked more about what he was referencing in that comment where he expected a big move in the price on July 5th. So stay tuned for that. In either case, I do believe there are buyers for metal out there. If you had a stock market crash, do I think that that's going to make the regular guy who's currently invested in the stock market go out and buy gold? Probably not. Although, is it possible that some of these bigger entities we're talking about start putting more pressure on there? Again, I feel like it's so close to the break point already that you don't really need even an extreme event to trigger that point where someone shows up for a piece of metal, it's not there, and there's a short squeeze with a much higher metal price, without really having honest data, which we don't think we have in these markets. It's hard to say how close exactly we are. But I would think that even if the stock market was getting hammered, if at the same time this manipulation just explodes, becomes clear to everyone that the banks have sold a lot of paper, gold and silver that they don't have. I believe that for each ounce of gold or silver, this is again just my own personal opinion, feel free to share in a comment below if you agree or not, but my belief based on years of studying this is that there are probably more than 100 paper claims for every ounce of metal. Again, if you factor in a lot of the derivatives, I hear those numbers can get into the multiple hundreds. And that's why at some point you reach that break point, and if people have to cover and it's just not there, that's why when you hear these rather big sounding numbers for precious metals, that's how, to me, it does become plausible, because it really is that, unfortunately, rigged. So anyway, I think if you finally have the manipulation overwhelmed, even if the stock market is getting pummeled, I mean, these miners would just be making so much money. Keep in mind, Keith Neumeyer got into this a couple weeks ago, the CEO of First Majestic Silver. Great guy to listen to, in my opinion. A lot of for example, in silver, he was mentioning that basically for projects that are already up and running, it costs them around $13 to $15 to get an ounce out of the ground. So let's say if silver went from $15 to $20, that's a 33% rise. Yet, let's just say that it cost them $14, to pick a number, for a miner to get metal out of the ground. So if their profit margin is going from $1 when if the price of silver is $15, costs them $14 to get it out of the ground, so the profit margin is $1. Silver goes up to 20. It's not a 33% increase. They went from making $1 per ounce to $6 per ounce. So that's why a lot of people that, I don't know, maybe not a lot, why I've always been intrigued by the miners and do some highly speculative things that for the last 6 years have not worked out too well. And again, please, this is not specific advice for anyone. I'm just sharing interesting scenario. I think that when the price of metal goes substantially higher, even if we just hit $50 silver again, even if the stock market's getting torched, you would think that whether it's the same day or it takes a little while, that some of these miners, to me, you would think they'd be going up quite a bit as well, because whether the stock market is getting crushed or not, the amount of money that they're going to be making with the higher metal prices that I believe are coming will be substantial, I think. Again, before getting into any mining companies, realize that that's a different bet you're making than just betting on bullion. If you bet on a miner that doesn't find any metal, the price of metals could go up, but if the company comes out with an announcement that they didn't find anything, so there's a lot of other factors, which perhaps would be a good topic for a video to get into one day. But just be aware of that. And again, I think the biggest advantage we have is that in the short term, especially because there is so much manipulation, you can be right about what happens and say, I believe X is going to happen, and in a logical world, when X happens, this would go and this would go there, which certainly I believe is how in the rational world we would invest. Keep in mind, things are so skewed that, just like if you saw the money printing, you bought metals, it worked out for a while, and then things have been rocky the last couple years. So we can factor that in and allow time to be an advantage on our side, because on a long enough time horizon, I think the probability of certain events occurring gives you such a great risk-reward profile. Again, I say this as someone who used to be a short-term trader. It just seems like that's if you can structure your trades so you put time on your side. That's what I do, and then mix in a couple reckless speculation ideas as well. But just be careful with those, and I guess the summation of today's video, allow that anything can happen in the short term, even if it's not what's rational. Although at some point when you see the metals go up, I think some of the miners could divorce themselves from the rest of the market action. And we'll see how it goes. So leave your comments below. I've had a lot of good discussions there. A lot of really educated and smart investors watching and commenting, which makes this a lot of fun. And we will see you again tomorrow. Thanks.